Wow, welcome, guys. So today we're going to be talking about the crash of gold. We're going to be talking about how gold is going to go into 1800. So let's see why and how I said gold will be going to 1800. Welcome to my screen once again. It's Nathaniel Brown, Digest Effects. Basically, we're going to be going in a monthly time frame to have an overview of what the market has been doing lately. And from what we can see that the market, has given us a very good range over the past 2 years. The market has been ranging over a particular zone, and we just need to just map out the support and resistance on that zone. So we could see here's the most recent support created, but this the support and resistance created, but this is the most recent support. Remember, the support and resistance must be in relation to your current price action. Do you get, guys? The support and resistance must be in relation to your current price action. So you could see here that the market has been ranging around the zone very well, and anything that will make the market break here is going to be coming here. So this is the first support we need to be observing. So we're going to go on a weekly time going to have a view. We could see that the market tried to break, it gave us a long wick, it didn't close. Later it came back and now it's about to sell. So basically we could see this is according to the candlestick reactions that's been given us, it's showing that the market, because this candlestick over here is a reversal candlestick, so it's showing that the market wants to start shorting. So how do I jump into this trade? The counter trend line rule. But before we do the counter trend line rule, let's let's draw our fib. Let's see. You know, let's see. So you could see from here that we should be, as I said, this resistance should be our first level we should be looking at. So you can see that from a weekly time frame, you can see that you know 618, which is this resistance at which we spoke about, was the level the market was coming to test. So you can see that it's in relation to what I spoke about, and we should, as I said, you guys should first look out for the most recent low that the market is coming to first before looking at the bigger picture, because the market cannot go the bigger picture without doing the smaller pictures. So we could see here that the number one confluence that we should short gold is that the market is coming to test 1800. I repeat, guys, 1800. So we're going to go on the daily. On daily now, we're going to be finding our entries. Very simple, it's very simple. So we could now let's draw a counter trend line. Remember the counter trend line rule. We just need two or more touches. Here we have one, two, and three. You get one, two, three. The market broke it conveniently. Now a daily candle close is a full confirmation that the market is time to start selling. It's time to start selling. At this zone, it came, it tested, it went up a little bit, came back. Once if it has not broken, we don't pull our triggers. So now it has given us enough confirmation that it's about to sell, and it's even a strong 4 hour candle. So what we'll be looking into now is a retracement back to the trend line. So in looking for a retracement back to the trend line, so we're gonna be waiting patiently to see whether either the market breaks here, then we enter upon retest, or the market comes to test the trend line. So basically, now our counter trend line has been broken, which is another confluence on its own. Now we're going to be on the 4 hour right now, and we're going to be going to the 1 hour to draw our fib on a smaller time frame to see. Now no now we have gotten the buyers of the market, which means gold is about to crash. So what we just need to do is to find an entry to join the crash of gold, guys. So basically this is going to be our entry. So we've noticed that the market probably is coming to test here this high, most of especially. Let's go on 15 minutes. Let's have a clear view. Thank you. There's a retracement. There was a little bit rejection here. So around this zone is where we should be looking to pull our trigger. So we're going to be, putting our trigger point, which is here on the 618, and our stop loss is above. It's quite wide. It's gold we're trading, so probably here. Then our stop loss is gonna be perfect. Yeah, yeah. So something like this is perfect. First level target, second level target. But from here I take 25% of my positions. From here I take 50% of my positions, and I leave the remaining 50 to ride down to 1800, as I said earlier. I'm going to leave the remaining 50 to ride down to 1800, which is here. Here, I'll take 75% of my positions. I'm telling you guys, so you get, once the market takes me in, you guys are going to be seeing, I'm going to be posting on YouTube the screenshots of once when I took 25% of my positions, when I took 70% of my positions, when I took 50% of my positions. You guys are going to be seeing it live and direct. I mean, live and direct. If it goes my way, I'm going to say it live. If it doesn't go my way, I'm going to see the losses live and direct. Not too much talk. So now we have gotten our point of entry. Very simple. Now we're going to be anticipating for 1900 first, and eventually 1800 eventually. So once it breaks here, we're going to take out our positions, then enter again to write those down here. So basically we are going to be stopping here for now to see what the market is about to do. So let's stop at 1900. Let's see what the market wants to do as that zone, because there's also give or take something there. So let's see. This is my entry for gold. Uh, I might look to change my entry point, because of the market varies at any point. I might look to enter from here, as I said. I might look to enter from here. I might even look to enter from here, depending on the condition of the market, depending on what the market tells me. The market acts and I react. I don't just predict. The market acts and I react. So basically, you've seen that this is our point of entry on this trade. So we're going to be looking for short opportunities, and I hope you're able to understand what I did everywhere here. Firstly, we understood the bias of the market. Secondly, we drew our trend lines. We got the bias at which the market wants to go. And eventually, if this didn't play out, or if this does not play out, I'm going to be drawing my trend line right now. So this trend line is going to be my guide. So once this trend line is broken, if it takes me out here, I'm going to wait for this trend line to be broken. Once this trend line is broken upon retest, then I can long go. But for the meantime, we trade what we see, trade what the market is giving us, trade what we see. So from what we could see that the market is coming to this zone, or this zone especially. So we're going to be patient enough to wait and see whatever the market does. The market might eventually come here and start spiking up. The market can be crazy. You get, we don't predict, we only analyze. The market does whatever it does, and we react, guys. So thank you for staying tuned. I hope you enjoyed this video. I hope if you want to learn much more, just go to our Telegram channel, message me up there. We also share fake signals on the Telegram group, and you can do well to please subscribe. Please subscribe if you love contents like this, so I can be giving you real time value, real time entries for my trades. Thank you very much, guys. Stay jiggy, stay blessed.